All right, hey everybody, this is John, and welcome to the free video. And let's dive right in. Initially today, everything looked pretty ugly, but if you look at the daily chart of the Nasdaq, all we did was come down to the 8 EMA. You can see overnight, we're up about 16 points. Well, it's like 6 o'clock in the evening. Yesterday at this time, we were down like about 40-ish points. So it's right now bodes well for kind of a quiet open. Maybe we get a flush, but I'm not looking for it. And the Friday expiration, of course, it's October, so anything could happen. So what I'm looking at is if this market, if you guys are familiar with the term max pain, okay, so max pain is basically the price where the most option traders will lose the most amount of money. And basically every stock on the planet right now has max pain below current prices. So as an example, Microsoft. Okay, if we look at Microsoft, Microsoft, as I recall, is around 220 bucks. Okay, max pain's at 210. Now, the secret to max pain is that if it's going to work, it needs to be within the expected move. So all these are outside the expected move, and I don't think we're going to see a huge plunge where all these stocks are, heading to their max pain level. That being said, though, it does act as a slight magnet. What would make sense to me is that we start off with a light gap up, but then we just spend the day drifting down. And again, I'm not looking for a plunge, but we've got a lot of active call buyers in this market, and it makes sense, for them to get wiped out, basically. And of course, the market's going to do whatever it wants. But in terms of a strategy, if we do gap up tomorrow, I'm really planning to sell call credit spreads on Amazon. Not Tesla. Tesla's got earnings the next week, so I wouldn't be surprised to see Tesla, whatever it does, end up with a strong close. But the Amazons of the world, stuff like that. The idea would be if we gap up and then roll over and sell off. So that's kind of the plan for options expiration. And then from there, what about next week? Well, keep in mind, if we come over here and we look at the spiders and we look at where we are. So, today's October 15th. Tomorrow's the 16th. So, we're looking at like 3 weeks until the election, all that kind of fun stuff. So could we go crazy and take out these highs? Of course, anything's possible. I think more we do some of this stuff. So I would just be careful here. We were talking about this in the trading room today. The time to get crazy, and crazy being a relative term, but I mean focused, take some big positions and hold on to them, is when you got to squeeze, the moving averages are stacked positive, and as long as it's holding that 8 and the 10x bars are green, you just hold on. August was the best trading month of my life. So now, in September, of course, and September's been fun. It was fun. There was a lot of kind of back and forth. But October, we got kind of like, oh, surprise move higher, and now we're moving lower. But it's not the same as this. And so you've got to have a shorter time horizon. You've got to be a little bit more flexible. And remember, what we're here to do is to make money, not to be right, not to hit a target, okay? It's to control your risk and make money. So be very, very conscious about that idea. This isn't about, having a specific expectation about what a stock has to do and then being stubborn until it happens. It's about, hey, if your goal is to make 2.5% a week and you're up at 2.5%, take some chips off the table, trail your stop, and treat it like a business. All right. If you don't, this is the kind of market that can chew you up. If you do, this is a great market to be able to do that in. All right. So anyway, you guys have a fantastic evening, and we'll see you at the next update.